Today was a good day. We'll start with, well, TRXC could be, I could go over that really quickly. This is one that I didn't really map out in the long range, but I knew that obviously got denied here at 525 pretty hard. Um, Previously I saw it on the morning and it just had this great uptrend right here. And I don't know, just that kind of range is kind of good. And I like the way that it was popping and dropping and putting in new highs and higher lows, and it was kind of just trending upwards. So I tried to buy the last dip before it reached 525 again, which was down in here, and so I drew on my lower trend line. But I also knew that when it was coming down slowly like this, that I think it would most likely bounce more bullish at this level than any other level because first of all, it bounced off 502 pretty hard. But the other thing is VWAP's down here, and the higher low would be down here. And so it's kind of almost like in sync with these last two higher lows. And it came below the trend line, but it was sitting at $5, right? So I wanted to see that it pushed back above that $5, and I ended up getting it 502 with smaller size. And that next candle, I mean, this one was low volume, this one was low volume. The next candle just brought out some really great volume, pushing it straight back through and up. I sold a little bit too early. Should have waited to get my PTs. First PT should have been, I mean, at least 515, 517s. Trim half there and then take the rest off at 525 or leave 10%. But as we can see, like, because it got denied so hard up here, I just didn't want to I didn't think that it could make it back through here. Like it's basically like my favorite way of putting it is that like when a stock makes a massive move like this, and even if it consolidates or doesn't consolidate and it gets pushed back, it gets pushed up to this high and then sells off, I don't know, like 10% of a move without like any real push back up, that probably means that there was a huge seller on here, and basically he's just punching everyone in the face, punching them and making it fall back down because there's just too many shares to be bought up, and he sold off every single share at 525, and that scared some people out, so that's what drove this lower. But as it comes back in, it makes these higher highs. You could even dip by it here, but I didn't see it. Um, I liked this VWAP dip ad because that really, when it's at a $5 mark, you got VWAP and you have the ascending, you have the trend line. It's really bullish. You got all three things on your side, and you got volume, of course. And as you can see, it was a great ad spot and push back up. All right, so now let's look at SLGG. What are we looking at? Oh, this is a great trade. Down in here. Oh wait, where? Right here, yeah, right here. Um, I don't know about that range. I was thinking more. Was it here? 548. I think it was this dip. Either way, I wish I saw this, but I didn't. I got into, or I saw this play at this level, but this was really interesting. So this morning I actually saw this. Like I was very on top of everything today. I saw that it had in pre-market. You got these things like sometimes when these things fade and they go way below VWAP, they'll eventually turn around and pop because they had all this crazy volume in the morning. But if they just fade all morning and then they get really below VWAP, a lot of the times when it gets to a certain point, like it'll sell off because look, it's found, like you can see, it found support right in here, right? Where these three spots kind of merged together, right? It couldn't get through that spot, finally got through. So now that can act as a support, and it obviously did here. You know, you could have tried to get the bounce here, but it couldn't push through. And yeah, it didn't bounce there. Could have gotten stopped out there. But then I noticed this is why you have to always look left and zoom out. I saw right in here it had bounced at this range, 482s or whatever, 482s, that range twice hard. It bounced hard off of that. Bounced hard off that level, and I had a feeling that it would bounce there because other than that, there's no real. Maybe way down here at 428, but at that point, this thing sold off so hard that it's like. But that would have been the next one. So obviously, it didn't do that. I don't like on these downtrends to buy the first dip, hardly ever, because a lot of the times if you bought the first dip here, it's going to fall back through. So it pops back up, and this is where you see your ABCD pattern, even on the shorter time frame like this. Pops back up, comes back down, puts in a higher low. Now you've got your trend line, right? So now you can watch this. Whoops. Now you can put in your trend line once it bounces off that level, and you know it's bounced off that level, and you want it to be able to put a trend line in, especially when it's this low. Otherwise, you don't really want to play it. So put your trend line in, and now on this third pop, this thing's probably gonna go see this prior high. You know, it bounced off that twice. See, and pushes back up through, goes to VWAP, stays up, comes back down all the way down to here. Hits that lower trend line. At this point, you're going to enter because your risk is so low. You could in the once again, here's another hard $half mark. Right, this ascending triangle lands perfectly on the $5. So you're buying your shares right here. Pops up. You want to try to get it as low as you can. Right, you're gonna go like 1 cent above wherever your trend line is, or a couple cents above. So maybe you got it at 505, whatever, blah blah blah. Your stop's gonna be the low of this. So you're risking like 5 cents for potentially a VWAP push up to like 548. And now at this point, you've got this line that couldn't break out. So maybe you want to see it push back up through here. So now you're in at 506 or 505. Stop is, you got 5 cents to the downside. And then this thing starts to slowly creep up, breaks that line. And maybe you trimmed like 10 there or something, or however 10% there of your position, and then moves up, and then you get that VWAP, so you trim 10% there, or 20%. This is my price target for sure, so I'll probably trim half through here. And right now you're already up 40 cents on $1 per share, which is crazy. And then it consolidates a little bit more, and you're like, all right, I'll just screw it. I'll risk 10 cents of my already created position, and if it drops below 531 or 5.3 or whatever, then I'll sell it. And so it holds and pushes up through that, and then comes back down, holds VWAP, maybe trim here, and it goes all the way to 586. I cannot make this up. Even in a shit market, these kinds of things can happen. You know, you just have to really zoom out and look. Like, it's kind of hard with all these things. I try to keep it simple, keep the EMAs off, just look at price and volume and stuff. But really though, if you can zoom out, you can see this kind of shit. You know, just draw your support, your resistance lines, and have short-term price targets, especially in a bearish market. Okay, so that was good. And then OCGN, the last one that I wanted to review. This was a nice one right in the morning. Gapped up, right? Kind of faded pretty hard here, but then reclaimed itself, reclaimed VWAP. And we want to be entering these plays mainly, like if we're going heavy, we wanted them to be above VWAP. And this thing was just, had so much volume and was just constantly moving. I loved it. Like, reclaims VWAPs, comes in here. I'm pretty sure I bought this dip. It was holding this trend line perfectly, which is super short term, right? Like, you're not gonna really, you're not gonna be risking too much, because if it drops anywhere below that, then this trend's probably gonna come back down to VWAP. So I'm sure they had a lot of buys down in here, but I ended up getting at, I think, like 12.83 or something off of this candle, and then immediately back in. This thing gets an insane volume spike, or an insane price spike with a good amount of volume, and then breaks above here. I had on the daily, I had price target, so I had 34635, because that's gonna be $half mark, you know. psychologically, and then I had 14 and 14.6. So because half dollars are usually what you want to go for, but when you're trading like this, you don't really care. You just want to get that new high. So here was the previous high, 318. You're in at 283. Risk is 277. You got 5 cents to the downside. This is the magic of buying the dip if it is a strong trend. You know, you can't be buying the dip on a falling knife. So you buy the dip here, boom, pops up, gets to that, breaks on one candle, breaks that high. Like, look how kind of choppy this was. But then all of a sudden it gets out even more volume and breaks through that, meaning that there was less resistance through here. No one's really selling in here. Everyone's just waiting for that next move. Who bought in here? They're not going to sell it off. And it pushes up, breaks that previous high, and then now you're looking. Your stop's going to be below here, which is great because you want to see it pop up and get above here, and it does, and it barely drops below there. I have your stop at 13.1, and your 13.1 stop is now you're claiming like almost 30 cents on the dollar here, and then it pops back up again. And then this is my price target, right? This is the first price target. This zone right here, I'm taking half off the table because this is a bearish market. Half off the table, and then boom, pops up. Almost gets to 14, but I'm probably going to scale the rest up in this level, you know, or this area. So pretty much you could have made like 50, 60 cents off that quick move in 3 candles, you know, in 3 minutes. So that's great. And then also on the way back down, comes up to 13.95, sells off super hard. So there's going to be a lower chance that this breaks through this area. So that way, when you buy this dip, your price target is really just going to be the previous high or that kind of area. You know, you don't want to try to hold your full position through this because it might get rejected again, which is exactly what happened. So it comes down. Here's that previous high, right? You want to see it hold above that. Now this was a resistance that couldn't break in pre-market, right? Couldn't break. It bounces off 2 or 3 times right here in this area. So you kind of want to just hold above this level. And the cool thing about this is that this might have been scary at the time because it was, I mean, that's like a big candle to come back down on, which isn't totally bullish. However, look at the wick. Look how long that wick is. It pulls straight back up in above here, bounced off VWAP down here, right? VWAP is so low at this point. Bounces off VWAP, pushes back up, and that wick closes up here. That is so like, it sucks that it came all the way down here, but one, it bounced off of here, bounced off this lower trend line, and then the wick closed above this line. Okay, so this is really bullish. So you're going to be entering, I mean, I don't think, you might have been pulled in off this. You might have, I don't know who would have done it, but maybe someone had some buys down here. They got filled down there. I got filled in here. 13.12, I'm fine with that, and boom, pops right back up again, and you're quite literally just trading the same trade again for probably $1.50. I mean $1.20 or something like that. Probably like $1 if you're conservative. And then you sell back up in here, maybe hold a couple, but it got denied so hard the first time that I'm not really going to be holding to this. So yeah, that was basically my analysis of today. It's much easier to talk about this than to operate in real time, and I don't know. I had my problem today. I always think of something I did well and something I did bad. My entries were absolutely perfect. Everything about my trading was perfect today, except for like my intuition, like seeing things before they happened, except for selling before my PTs. It's a bearish market, and I had a couple days of losses, so I was kind of like more cautious and like just like, okay, profit's there, take it off the table. But I think the hardest thing for most traders is letting their winners run, because it's easy to put a stop loss in and be like, all right, I can cut my losses here, but it's a lot harder to stay disciplined and trust in your price targets, like trust in your support and resistance lines to really control your trades and have as much control over your trades as possible. And I struggled with that today, so I was cutting my winners too early, and there's a lot more profit to be made. But either way, I'm really happy with the result today, especially in a bear market. Staying green is great. I know the pros are staying green no matter what, but I think it's best to get practice in these shitty markets. So yeah, all right.